Oil prices moved higher on Tuesday as investors shifted their focus from easing geopolitical tensions in the Middle East to rising global oil supplies and the outlook for demand. Brent crude gained 85 cents, or 1.2%, to $72.84 a barrel, while US West Texas Intermediate rose 74 cents, or 1.1%, to $69.29 a barrel. Both benchmarks had settled on Monday at levels close to where they had traded before the US-Iran conflict escalated. Analysts said the market has largely priced in the easing of immediate geopolitical risks but remains cautious about the fragile ceasefire between Washington and Tehran. He added that markets are now looking for signs of stronger oil demand, particularly from China, saying the next move in prices will depend on whether actual consumption matches expectations. US President Donald Trump said on Monday that Washington would either reach an agreement with Iran or finish the job, renewing the threat of military act as Tehran maintained a defiant stance following the funeral of former Supreme Leader Ayatollah Ali Khamenei. Investors are also closely monitoring negotiations between the United States and Iran over shipping through the Strait of Hormuz, a key global energy corridor, while tracking the recovery of Gulf oil exports. On Monday night, Iran's Revolutionary Guards reportedly fired at least 2 missiles at commercial vessels transiting the Strait of Hormuz, according to Axios, citing 2 US officials. The report said the ship sustained significant damage, but there were no casualties. Shipping data on Tuesday showed Japanese-owned supertankers carrying Saudi Arabian crude heading toward the Strait of Hormuz to exit the Gulf, joining other vessels that had resumed voyages after being stranded during the recent conflict. However, analysts at ANZ said the recovery in tanker traffic has been slower than expected. They noted that the initial rebound in vessels crossing through the Strait of Hormuz has stalled, with transit numbers remaining in the single digits and no sustained recovery yet visible. According to ANZ, although the interim US-Iran agreement has reduced immediate geopolitical risks, shipping companies remain cautious, slowing the return of crude exports to normal levels. Meanwhile, the United Arab Emirates increased crude production to more than 3.8 million barrels per day in June, its highest level since April 2020 and above production seen before the recent conflict with Iran. The increase follows the UAE's decision to leave OPEC plus production quotas in May. Separately, OPEC and its allies, including Russia, agreed over the weekend to raise collective production targets to 188,000 barrels per day from August, following similar increases already announced for June and July. In another sign of growing supply, Saudi Arabia cut the August official selling price of its flagship Arab light crude for Asian buyers to $1.50 below the Oman-Dubai benchmark. The reduction of $11 from the previous month marks the largest monthly price cut in more than 2 decades, according to a price statement from Saudi Aramco.